Palantir shares fell after the company's CEO, Alex Karp, made some comments to ask short-term investors to stay away from the stock, and clear about supporting long-term retail investors over institutional investors. Alex Karp states that short-term traders should look away from Palantir as the company has a long-term vision for success and is not a stock for day traded. As of 8 April 2021, Palantir trades at 151 times 2021 profit projections. Palantir estimated its revenues will grow to $4 billion by 2025, hence it is positioned for a long-term investment. Palantir Technologies was founded in 2003. It specializes in big data analytics. Their software lets organizations integrate data, decision and operations into one platform. Palantir also builds and deploys software platforms that assist in counterterrorism investigations and operations. Recently, Palantir reported strong earnings for the fourth quarter and the year ending December 31st. The company forecast its 5-year forward revenues would be 4 times greater at $4 billion, up from $1.1 billion in 2020. The stock's initial IPO listing at $10 on September 30, 2020, it rose to its peak of $38.27 in February. However, the stock dropped to $24.04 on Friday. Could this be an opportunity to get in now? If you are new to this channel, welcome. We are making videos to analyze companies and provide information to help you understand what to invest. On 5 April, Palantir announced that the company secured a 5-year, $89.9 million deal with the National Nuclear Security Administration. The platform will support NNSA's safety analytics, forecasting, and evaluation reporting project run out of its Office of Safety, Infrastructure, and Operations. As of December 31, 2020, Palantir had just 139 customers, and the average revenue per customer was $7.9 million, up 41% from 2019. This means Palantir's sales are highly concentrated, and the loss of even a few customers could hurt the company in a big way. Despite this risk, Palantir has grown revenue at a steady clip over the last 2 years. Palantir is not currently profitable, because it's investing heavily in growing its business. For example, sales and marketing expenses accounted for 63% of total revenue in 2020. And research and development spending accounted for another 51%. As a result, operating cash flow came in at negative $297 million last year. Even so, Palantir has over $2 billion in cash and equivalents on its balance sheet, so the company can afford to lose money for several years while its business scales. Moreover, at this stage in the game, spending heavily on growth makes sense. As Palantir's customer base expands, the company has the potential to be very profitable, as evidenced by its 68% gross margin. Palantir stock has declined by about 37% from its February highs. The stock closed at $24.04 per share on 9 April. The decline is driven in part by the massive sell-off in high-growth stocks, and the expiration of the company post-IPO lockup last month. The executives offloaded over $600 million worth of stock in the market. Palantir went with a direct IPO that enabled insiders to sell 20% of their holdings at the time of listing. They will be free to sell the other 80% of their holdings as the lockup expires, boosting the supply of the stock. Separately, recent comments by the company's CEO asking investors with a short-term focus to consider other stocks are likely to have hurt the stock. Based on Palantir's daily candlestick chart, the stock is now trading below the 21-day moving average. However, it is holding up above the 10-day moving average and the key $21 level. If Palantir loses $20 and cannot rebound, it could drop further, potentially down to below $16. On the upside, if Palantir stock takes out the levels that it rejected, specifically, those levels include the 10-week and 21-day moving averages and downtrend resistance. If the stock breaks through those marks, it will move into its 100-day moving average range, based on the new high set in Mar where the share gained $2. Then the next test level will be at the 50-day moving average. If the stock breaks above the 50-day moving average, the upside will be between $32 to $33. However, all these are short-term projections. Retail investors of Palantir should know that the company's CEO, Alex Karp, had made a strong promise that the company has a long-term vision for success, hence investing in Palantir is for long-term gain. Many analysts had published their projections on Palantir's revenue growth and stock price. Let's take a look at a few of their projections. Palantir projection growth rate is 67.1%. By 2025, Palantir revenue will grow to $4.09 billion. Its earnings will grow to $742 million. Its free cash flow will be still above $1 billion. Palantir's annual growth forecasts are expected above industry average. This seems very optimistic, as recently Palantir Technologies said its revenue growth in 2021 is expected to slow to about 30% in 2021 compared to 47% in 2020. While the company's reputation was forged based on big government contracts, Palantir is working to expand its enterprise reach via partnerships with IBM. Palantir recently launched its new platform, called Foundry 2. The Foundry 2 is designed to be more modular with better data integration, no-code apps and a mobile offering. Palantir's previous products required more high-touch implementations and consultants. A recent demo day generated more inbound inquiries from potential customers. Hence, Foundry 2 could even reach into the small and mid-sized business market. This could potentially expand Palantir's revenue. As for Palantir's stock price forecast, analysts are very optimistic. Projection for Palantir's stock price will reach $100 by 2022. Online stock forecasting service Wallet Investor is very optimistic about the stock's long-term future. Its Palantir stock forecast 2025 has the company trading at $348.78 per share, up from an average of $78.46 in December 2021. Palantir is one of Cathie Wood's favorites, and we like Palantir's share too. We will keep Palantir's share in our portfolio, as Palantir stock is our long-term investment strategy. If you like this video, please give us a like and subscribe to this channel so that you will be notified for future videos. This can help us continue to do more videos in future, and more people like you can watch the video. Thank you for watching.